Okay, we'll see how that does. You had a hard time getting into NFP. When you say a hard time, oh, there's Jeffrey. Okay, what was the problem, Calvin? Yeah, I saw what you said, Jeff. I understand that. So, all right, well, we'll wait a few minutes. There's no rush to start. We'll let everyone figure it out. It shouldn't be that complicated. But our whole calendaring system was, we tried a bunch of different ways of doing that. And at some point, we'll get rid of the whole booking thing completely. But for now, it is what it is. It doesn't show up in booking. Yeah, the ad hocs don't. Yeah, it doesn't need a lot of horsepower, Cal. That's why, we don't devote a lot of resources to it because nobody uses it very much. But Lee is out of the office today because of a medical emergency, so he will not be joining us for the preview of his closing segment. So, first of all, I need to announce that and apologize on his behalf. Yeah, he'll nothing really serious, but serious enough that he couldn't join us. So anyway, again, I'm going to start in just a few minutes, but I want to give people time to figure out how to get here because we're under count by only about half the people are here so far. So we'll let everyone figure it out. Let me see if JVC is around, if he could help people. Yeah, well, once you get old, Cal, it's a really medical use kind of is everybody, right? Medical issues. No, it ain't for sissies. It's interesting. I had a conversation with a friend about this very topic, and he's one of those people that's pretty generally optimistic, and he's like, "Hey, getting old's a privilege. Most people don't get to do it," and that's a good point. So, anyway, all right. We will start in a few minutes. Again, I'm just giving people time to get here. There's only like half of the regular group has figured out how to get here. I don't know why. So I'll start in just a few minutes. I'm gonna continue cat herding to get people in here and see if I have any other questions now. Okay, so yeah, exactly, Jeffrey. You're 45? I thought you were, yeah, a little bit older than that, but that seems about right. I had a stroke when I was 27. So, anything can happen anytime. People don't understand that. I remember when I was in the emergency room for that, all of the residents and interns were coming in to see the case because it was so unusual for a 27-year-old to have a stroke. Everybody wanted to see me. I should have charged admission. It was ridiculous. I was in a teaching hospital, UCLA. Anyway, all right, I'm going to go ahead and get started here. Everyone should have figured it out. Oh, it definitely changes your perspective. Yeah. It's funny because everyone talks about that. And if you haven't experienced it, you'll say to yourself, yeah, that would definitely be life changing. But you can't really understand it unless it's happened. I know Jeffrey understands what I'm saying. And unless you've had a life threatening experience that you've lived through, you won't understand what we're talking about. It's very unique. You just have a totally different perspective. Not always in a good way, and it's just in an informative way. It's good on, depending on how you interpret it. Yeah, without going through it. That's the problem. That's the easy way, Donna. We don't get to do things the easy way. All right, let's go ahead and get started. First of all, announcements. Lee will not be joining us. He has a a medical emergency. He's okay, but he will not be able to join us. So he was going to talk a little bit about his upcoming premium course, which will be very much like this one, except it will be a structural view. We haven't scheduled it yet. We just talked about it and agreed it was a good idea, and he was going to introduce it. And then, unfortunately, today he can't do that. So stay tuned. We will tell you more about that as we have information. Meanwhile, let's talk about today. The first thing you should always do when you arrive at your computer is stop, look, listen, smell, even if you've been at your computer all day. I traded this morning on NFP, as you guys know, and then I went back to sleep. Good suggestion, Donna. So I did that for a couple hours, and then I got up and played with the puppies a little bit, and I'm just getting functional again. So this is a good rhythm for the day. Let's walk up like we've never seen anything today. And what does it tell us? Well, here's the, let me get rid of these. Here's the layout of all of the indexes. And I'm going to change this just one quickly. Yeah, let's go to 5 minutes here and just get a zoom out view. So left to right, NQ on the far left, then ES, second from the left, YM, RTY. So what do we got here? Well, the weakness from yesterday continued. NFP numbers didn't really say anything one way or the other, as they usually don't, but the market interprets things the way it wants to, and this is how it's interpreted. Gap down, the gap was big. What does that mean if you're trading the 15-minute setup? With the 15-minute break, you should have gone to the downside if it broke to the downside. Let's see what happened. Here's the 15-minute, this yellow line right here. This is the other side of it where my pointer is. And there's the 15-minute break trade right there. So 87 was where it broke the 15-minute. And it was a straight drop all the way to 41, a 40-pointer. Again, if you're not doing this setup, I don't understand why. I say this every time. The 15-minute break setup is the most reliable thing I have to teach you. You should be making money with it every day. Meanwhile, what's going on since then? Well, we're ebb and flow at the low. So don't be confused into thinking we're trend down. We're not. We have stopped going down. Look at this. We've been, ever since we made the low, which was a long time ago, the initial balance is right here. So that's the first hour, and we're above it, except in YM and RT. Well, RTY is above it. YM is the only one. It's right on it. The others are above it. So we're in ebb and flow at the low. That's a very dangerous set of conditions, but it's not down. We are not going down. We are ebb and flow at the low, and that's an important distinction. Seemed like the 15-minute break was a few minutes early today. Yeah, it wasn't that it was early. It just, there was already downward pressure because of the big gap down in NFP. So here it is on 1 minute. Let's zoom in a little bit on it. You can see it broke right there, and that was before the initial balance, but it was well after 15 minutes. We formed right here, tried to go up a little bit, and then the bottom just fell right out. So I talk about this setup, Oliver, every open session that I do, and I do them on Tuesdays and Thursdays. I talk about this setup. I don't want to really go into too much detail on it for the close here. I'm just kind of summarizing what happened today. But it's my favorite setup, and I'm a broken record about it. If you're new and you need a good edge, that is absolutely the best one. There's no question about that. It's a very simple setup, but again, I don't want to teach it now. Come to any of the Trading the Opens, or you can watch any of the Trading the Opens, like watch the Trading the Open from Tuesday or Thursday this week, even in the library. Okay, so yeah, and joining them would be good too. But again, if you're not familiar with the library, everything we do is in there. Real quickly, I'll show you. You got to understand how it's organized, but it's pretty JVC organizes it. It's pretty straightforward once you know where things are. But just if you're new, let me show you real quickly. That's worth doing. So here's the library. And this week in TRG, my trading the opens are always going to be there for the week, and then price action scalping is where the ones before that will be. See, trading the open first hour, you'll see them there. So that's where you go. Okay, now I see we're getting a little, you're welcome. I see we're getting a little bit more folks coming in. So let's get started or continue getting started. So anyway, we gap down and we're at the low, but we're in ebb and flow. We're no longer going down. We're just kind of working a big range, and that's good for the kind of trading we like to do. So we'll talk about that some more in a few minutes. Meanwhile, this is the picture of what's up and down. Apple is the only thing holding up the tech world. So obviously there's a lot of pressure on the NASDAQ, and the SPOOs being tech heavy have the same problem. And yeah, this is a long time coming. This move, it's a correction, and we haven't had one in forever. Look at where it puts us in TPO land. So this was yesterday with the blue big down. This was the overnight, and then this is this session. So we are completely in a correction here, and it was very tradable in all the indexes. Again, the 15-minute kind of gave you a clue, but you could have played a lot of different ways on this. So that's the kind of scoop right now. Let's go into... Yes, that's true, Calvin. I agree with that. So anyway, let's go back up just a little bit into review mode. So if you're not in the closing class, you're going to get a little bit of it today because this is the last session of the Trading the Close class also. I decided to combine them and just review, and today will be a great day for the close because we have all the good conditions that I look for an eventful close, put it that way. So first setup that we're going to review is short squeezes. They happen any time of the day or night. They're really easy to see. Just watch the bid. If the bid just relentlessly is refreshing and price is going up because people are lifting the ask, then you have a short squeeze. And learning how to see them coming, particularly at a liquidity spot going into the close, is very, very valuable. And again, during the class the last 2 weeks, we looked at a bunch of examples of that. It's a little bit counterintuitive when you're new, but the more extreme down we are, the more likely we are to have short squeezes at the close. And the reason is just really simple. People that are short have to buy the contracts back, and that is creating demand. And the sellers know that. So they see demand start getting aggressive, and they literally will just move out of the way, and then the guys buying will get more aggressive and the sellers will move out of the way more. And so it's really easy to see when it's happening. I'll try to point it out today as we see it, but again, we've watched it many times in the last 2 weeks. So that's one of the biggies. It can occur anytime. It can occur in concert with other setups. So, you can have an extreme setup, which is the second one that I watch. Where are the extremes of the session? And I define extremes as SD2 or better, because the VWAP and SD1 or -1 is the normal statistical range. So between that dashed line and the blue line in the middle and the dashed line on the other side, that's normal. It should explore in there if the auction is behaving normally. But if it gets down to SD2, it statistically is getting to an extreme, or going the other way, going up, same story. But if the VWAP is sloping in the same direction, then statistically it's not that extreme. It just means we're pushing that extreme out in that direction. So again, statistics is not, as much as statisticians like to think it's an exact science, it's not. It's thinking in bets. So what you learn by those things is to think in bets at those spots. You don't automatically buy or automatically sell. There's no support. There's no resistance. This is about just how far have we gone? And there's, a lot of ways you can do this. Lee does this with the same way I do here, and he also uses the ATR, and that's also legitimate. It's just a way of understanding when statistically we have gone a long way. And one of the other things that's interesting about this particular setup that's worth keeping an eye on is if we get extreme and we get more than 30 points away from the VWAP in ES. This is always use ES as the measurement of this. You can trade it in the other indexes if we're well correlated, but ES is kind of the benchmark. So like we saw in a couple of times in the last 2 weeks, yesterday, for example, it can get really far away. And if it gets anywhere above 30 points, particularly a lot more, like 60 points, which is what it was, it's really likely to at least close that distance. Now, whether the VWAP's going to come down or price is going to go up or a combination of the two, which is the most likely. And again, this happens at the high, it's the opposite, but it's the same idea. So it's just a way of measuring, where value is roughly. And the market tends to go to value, but it can stay out of value for any given day. So again, not an exact science. It's thinking in bets, and it can help you, particularly when you get an extreme, for example, at the low, and it's short squeeze conditions. So what are some short squeeze conditions while we're talking about that? Take a look at the cumulative delta of ES. Right now, it's like minus 15,000-ish right here. That's not that far down on a day that's a big down day like this. Typically, it would be lower than that. There's already been a lot of buying down here, so it's kind of bouncing out. But if the cumulative delta is more than minus 30,000, that makes short squeezes much more likely, just because, again, it's not that many people are short, but there's more people net short than long is what that means. And again, it can stay that way for a long time, but it just increases the odds of a short squeeze. Now, on the other side of the range, if the cumulative delta is really high, can you fade the high? No, because that doesn't mean anything. If people are net long, they don't have an incentive to get out at the highs. If people are net short, they have to get out at the lows or on somewhere because they need to buy the contract back. They don't own it. They sold it. So this is a really important distinction about closing setups. Short squeezes and extremes kind of combine to provide a very, very good setup. Now today, again, the cumulative delta is not quite low enough to really look for that, but we'll still probably see some short squeezing, particularly because it's Friday on top of everything else. So that's setup number 2, short squeezes extremes. Setup number 3, there's 2 different versions of it, so I call it 3 and 4, basically. There's ways of playing the range, and that's in a quiet market ideal. So if, the range of the day is 20 or 30 points and we're trading around the VWAP, you can scalp really aggressively as soon as we get anywhere away from it into liquidity. So that's how you do it in ES. For NQ, because the liquidity moves around so much and it's not very definitive, it doesn't hold and trade like it does in ES. If you're going to play ranges over there, you have to look for kind of the top and the bottom of the range. And I did that in a bunch of sessions where I just kind of drew on my NQ dome, a little V at the bottom and a V at the top. So is there a definable low end of the range? Well, right now, not real clearly there, maybe around 0 down here. And the top of the range, again, you want to look for selling, and that's not really clear. So I reset it and let it build me a new picture and see if there's a clear range developing. Because if there is, on tighter range days, this is a really good way to make quick profits. The danger of both of these ideas of scalping tight ranges in ES or in NQ is on a big range day, a tight range is relative, it's dynamic. So today the range in ES is 140 points. That's huge. And it's almost 600 in NQ. So what does a tight range mean? So this is the concept I was talking about all through the class about dynamic ranges. And this is really important to understand. Dynamic ranges is just my way of saying, if you're going to be looking at the market from the point of view of the range on any given close, what is the session range, the 24-hour Globex range? And right now, again, it's enormous, 140 points. So even if we're right on the VWAP and we're going back and forth in a really tight range, it's really hard to statistically game this because it has so much potential to go either way. On the other hand, if it was the exact same scenario, but the range was really tight, that's much more tradable because you know the boundaries are not that far away. So it's easier to understand your catastrophic risk. Also, if the range is really big and we're at one end of it or the other, that's fine. That's gameable. So, like if we're here or we're here. So that's how you have to think about ranges. It's dynamic. That's why I call them that. And so there's not a set size, but in general, a big range in ES is above 50 points. So today is huge. And in NQ above a couple hundred, 300. That's where I start considering it big. So that's always important to keep perspective. And I see a question. By the bid relentlessly resetting, is this pulling and stacking, i.e. stacking? Yes, it is, but it happens really fast and aggressively when you're seeing it as a short squeeze. So it will light up the flip chart in blue, and you will see stacking on the bid side, and you'll see pulling on the ask side. So you should see minus numbers and big plus numbers, and it should just be relentless, because again, it happens when somebody's trying to fill a position and the sellers see it and they move out of the way because they know they can raise prices. It's like, imagine you're at an auction for anything else. Forget trading for a minute. Imagine you're at an auction and you're selling collectible cars. You've got a 63 split window Corvette and it's yours and you're selling it. And that's a really valuable collectible muscle car. So let's say, you go to the auction and you see the auction is bidding at $500,000, and your ask, how much are you willing to sell it for? Let's say you've got it at 750,000. That's your reserve price or your buy it now price, whatever. Okay, if you have that price there and you see just aggressive buyers, you're not going to meet them. You're not going to say, okay, I'll let you have it for that. Like 10 people bidding on your Corvette, you're going to say, how much can I raise my price? Do I hear $1 million? Because it doesn't mean anything to have a cap on that when there's aggression. And it's the same way with the auction in futures. The sellers can see the aggression, and they're big trading houses have algorithms that do this, where they'll just jump out of the way, and in some cases, some of my hedge fund buddies, they'll even join the bid and try to push it up even if they're trying to sell it, because what they'll do is they'll post liquidity way far away and they'll see if they can drive the price to it. So that's what the short squeeze setup is about, and it's really easy to see. We saw it a bunch of times during the class in the last 2 weeks. If you just watch any of the recording examples, you'll see it. And if we should get it today. So I'll try to point it out as soon as it starts happening. But this brings us to some more detail that we talked about. If you're going to look for that, obviously you're always looking in ES for these things. That's where the benchmark is. You can trade it elsewhere, like I've said, but what you want to watch for, a short squeeze will often start at a spot where there's liquidity or there's a quarter number. And so, let's say we had a high delta. So it wasn't minus 15,000, but it was minus 30,000, minus 40,000. And we were trading pretty predictably around the low here, not the low of the session, but the low of the recent range. You can see this spot right here. So watch the bid and watch the order book. And if that number, there's one right there. We just had a short squeeze. You see, I was pointing at 63, and all of a sudden the bid got big, and these guys just literally jumped out of the way. You can see the white just disappears. And so, it can happen just like that for 4 or 5 ticks. But again, sometimes if more than one large party is on the buy side, it can go a very, very long way. I've seen these go 60, 80 points, hundreds of ticks. And in a matter of minutes, it can happen. So you never want to fade short squeezes. You want to try to join them. And again, if you can kind of see them coming or where they might be happening, down around here is an interesting spot to look for buyers, and even a little lower down. The buyers have been pretty aggressive down here. See, I'm kind of, let's see if we can get a position right there. Let's see. Okay, I just filled at 60.5. And again, there's 3 ticks, there's 4 ticks instantly. That see what I mean? That those are little short squeezes because the people buying know that there's lots of demand there, and they're trying to get in front of it. And here we go. Let's see if we can do it again here. 57 and a half quarter number. Okay, we're long 57 and a half. We'll go for, again, 4 ticks. You can always get 3 or 4 ticks on this setup. I had 3. There we go. See what I mean? That's a very repeatable setup, but you have to learn how to see it and you have to practice that. There's no magic indicator, there's no magic tool. You just see it happening and you respond to it, which is another thing that I talked about a lot during the course of this class, and I want to repeat it a lot. Understanding a setup is only the first part of it. There's 3 steps really to getting consistent in the market. Number one, you need to have an edge. You need to know something that happens frequently enough that you can trade it and with some sort of statistical odds that are in your favor. And that's thinking in bets. That's an edge. So for example, what I was just talking about with the 15-minute break, that is a massive edge. Why is it such a massive edge? Well, when we don't have a gap, a weak break is fadeable 87% of the time. And again, that's a statistic we tested back like 15 years, and that's a reliable number. It's even better when there is a gap. If there's a gap of 20 points or more, or like we had in the last couple of days, these 50, 60-point gaps, the odds, if the 15-minute breaks in that same direction, so this is the setup for those of you that were asking me about it. If it breaks in that same direction, we cannot find an example in the last 15 years where it didn't go for at least 2 points and often 20 or 50 points. So that's why that's 100% that edge. So then what do you have to do? So number one, you need an edge. Number two, you need to practice that edge. It doesn't work automatically. You can't write a bot that does it for you. You can write bots that help you do it, but you have to understand it and practice the execution of the idea. The idea just tells you statistically you have an advantage. It's like when you go to blackjack in Las Vegas and you get dealt ace king, it's really hard to lose that hand. The worst case is you'll push the dealer if he has it also, right? So that's an edge. So you need an edge, and then you need to practice your edge. And that means you can execute it when it happens. And that takes tens of thousands of practice sessions. You got to do it over and over and over again to get good at it. That's the 10,000 kicks idea. And then the last piece is you have to understand how to manage the risk of your edge given the size of your account and how much money you can afford to risk on each trade. And it's that simple. So learn to think in bets. Find and practice your edge. If you don't have an edge, trade the 15-minute break because it's the best edge I've ever seen in 50 years of trading. Okay, that's why I talk about it all the time. So that's the closing setups and how I trade them. And that's kind of a quick review. Again, I'm not going to do 2 weeks of classes in 15 minutes, but I just wanted to kind of hit the high points. And so let's see what we get for today. The short-term range as defined by my LRCs, as you see on the top of both of the domes there. At the moment, we've got a little bit of a bias to the downside, but as I was pointing out in ES, we're working liquidity at the low end of the range here that's relentlessly buying, and it's creating short squeezes every time they buy. So I'll be real interested to see if that area breaks down like it's trying to do right now. Can we get below this recent buying right here? So that's a really good high odds place to get long. And again, see, there's a little squeeze. I can't even catch it. Perfect example. So you gotta let it come to you. Here's a quarter number. Again, that spot just got bought for 5 points. See what I mean? Those patterns repeat if you're not overthinking it and you're not watching your magic indicator and you're just watching where the buyers are and what they're doing in this instance. And again, that just happened to be right at the edge of the range, which is why I let regression tell me what the range is, because that's a very powerful way of removing your bias from the equation. It's really hard to argue with linear regression. It has the answer. If you don't agree with it, that's your problem. That's the range right now. And we can go above or below it. Regression isn't the high and the low. It's the best fit of the data. That's why that's very powerful. Combine that with extremes and short squeezes and the short-term range, and you have a very powerful way of trading the close, which is why we did this class. So if there's any questions about any of the setups or any of the things we've covered over the last 2 weeks, I really need you to ask them now. This is going to be your last chance. This is our review and our open Q&A and all that. So think about it. Let me have them. Put them in the chat. If you want, you can unmute yourself and ask out loud. But other than that review, what we're going to do the rest of this session is do some trades and see what we can get. I've got, as I mentioned in the coaching group and in a couple of the live sessions, my Trading the Open and whatnot, I'm doing right now, I've got a 150 Apex eval going with a challenge to the coaching group. And this is on the, 1 day to pass and all that, but I'm not pushing it that hard. So far today, I've done just $1,000 in it, with a few trades. Most of that was at the class this morning on the NFP numbers. So we'll trade in that account, and it's a 150, so I've got pretty much room there. I'm trading only the minis in ES, and I'm trading only blocks of 2 micros at a time in MNQ to be able to scale and manage risk better over there. So that's the scoop. And by the way, I'm just about halfway. I'm a little farther than that through the it's a $9,000 target. I'm at about 5,000, so little more than half in 2 days. So that's cool. Anyway, so that's the scoop. We're right on the VWAP here. See, this is the RTH VWAP. This one is Globex on here, so it's a little higher up. But we're nowhere away from value at all. We're on value for the session. And don't make the mistake of thinking, oh my God, it's a trend down day. No, yesterday was a trend down day. This is not. This was opening weakness that found buyers, and it has been sitting in ebb and flow at the bottom end of the range all day. Don't be confused into thinking that's a trend day. Yesterday, we had a bona fide trend day, and they're very rare, 15% or so. But we did have one yesterday, and I'll show you it's much different the way it looks. So, see what I mean? Anyway, let's go back to this. And okay, don't see any other questions. So we are at the top of the hour. This is the M period trade that Lee was going to talk about a little bit. There's a lot of, if the market's going to break the range going into the close, this is when it will do it statistically. And again, he'll talk about that. So, where's the low? Well, it's pretty far down here. So I don't know that it's likely to do that. All the way down 31 in ES, that's a good almost 30 points down. So it looks like we're going to have ranging behavior in this close. And probably because of the ranging behavior, that will stimulate some short squeezes. So let's be patient. Let's reset the volume on both domes. So I'm going to do that right here. So we have a brand new volume profile building in both cases. So let's let it tell us what the range is. Right now, it should be at the bottom of the range statistically. So let's see if the top holds where it's saying it is statistically, and what the volume and liquidity looks like at both ends. So right now, the top of this range is about 64, and there's all the liquidity. Surprise, surprise. So they're looking to sell up there, at least at the moment, and that's right on the VWAP as well. So, and we have sold up there previously, you can see. But again, on the close, I prefer to be long rather than short. So I'm looking to buy the bottom end of the range more than I am looking to sell the top of it. So let's see if the bottom holds here. And like right around here's a quarter number. Let's try to buy it right there. Long 57 on the 57.5 quarter number. 55 high volume node needs to hold. And we are looking to trade back up toward the 60 quarter number. So let's see what we can do here with this. Again, I'm just kind of creating a setup to show you a trade. So I'm going to scale this one a little bit here. But if the bottom falls out, I'm in trouble again. This should be where we find buyers based on the liquidity in the previous range and the traded volume. And we are finding buyers here. But again, it's very erratic because the range is so big. So we can't just automatically, get long there and stay long. But I'm going to play this one pretty aggressively. Again, I love being long going into closes. But there's pretty good selling right here. So I'm going to be careful not to get too aggressive here. I've got a 4 lot, take one more there. Now I've got my targets right on the 55 quarter number, which is perfect. So I can actually take profit long before the 57 one that I was originally playing. So we might be able to catch a nice move up here with a short squeeze. Watch the bid. Next, going the other way, actually. Somebody's selling pretty hard, so I'm off sides here. But then the 52 and a half quarter number is in play. And again, with a big account, you can do this pretty aggressively, like I'm doing. See, the buyers will ultimately push the other way, and there's a nice little profit. Maybe I can protect this, maybe not. Let's see, I have 2 left. Let's try to get it scaled the other way here. So we'll try to scale at the bottom of this buying and maybe even down at 50. So see, I'm working the fact that they're buyers here, but they're not as aggressive as I'd like to be. They came in pretty strong there, but see, with the range is now shifting down, it's sloping down, and we took out that previous low, but I'm still profitable right here because I scaled it properly. And because I responded to the buying and selling there. So now I can get underneath it, and now I've got a really nice runner here. So we're long 52.75. It's at 56.75. Lock in $200 on this, on the trade. We'll kill these guys, and we get filled. See, so that's how you play the range. There's lots of examples from the class. For 2 weeks, I've been showing you very much like that, but that was kind of an aggressive way on a big range day of playing the aggression into the liquidity. But even so, I got a little offsides there, have to manage the risk of it. What if it had started selling off even harder? Where would I have gotten out and stopped trying to scale it? And again, you have to think of all that in advance. You can't just, willy-nilly do it. And the ES and the NQ both love to probe previous liquidity and find buyers or sellers. That's why that's on my sheet as a specific point. And my sheet, I'm referring to, not my sheet, but I'm referring to this sheet of my parameters for trades, how I make decisions. And that one was the liquidity one. How is the liquidity trading? Well, this liquidity is aggressively getting bought, but that last example, it just overshot the low a little bit. That's all. And it'll do that because that's how they take out the stops of retail traders. And aggressive traders will do that all day long. See, the recent low had been like right here. And see, they just overshot it a bit, but it was really clear that was happening because look at the aggression of the buyers here. And the liquidity shifted down, but then it immediately followed up. See right here? So it was really obvious that was happening. Again, it's obvious to me because I've watched it and seen it so many times. It gets obvious to you by practicing. There's no, magic example, magic tool I can sell you. Well, if you buy my $10,000 indicator, it'll turn green when you buy. It doesn't work like that. It works like the way I just showed you. And that was a really nice little $200 trade with a 5 lot. In an account, this is 150K size. So I have a $5,000 trailing drawdown and I'm up $5,000. So basically now if it just goes back to break even, I'd hit the trailing drawdown, right? You can see that if you look at on RTrader Pro. See, the trailing drawdown is now right at the break even at 150. It's right there. And I'm up at 154, almost 155 in 2 days. So, okay. So let's see if we get an extreme example. I'd love for it to push lower and, really maybe get down to, the 30 area again, or maybe even to SD2, which isn't out of the question here. But, most of the pushes down, buyers are using that to take advantage of to cover shorts. That's what we're seeing. And that's why the cumulative delta isn't really negative. Every push down is finding buyers instead of sellers reasserting themselves. And again, this is expected on a down day Friday at the end of a volatile down week. Okay, so again, we'll continue looking for opportunity. We have a really nicely defined range in ES, and look where the liquidity is. It's right at the edge of the recent range. Surprise, surprise. Beautiful range. It's a little too big, though. It's 10 points. That's 40 ticks, and that's the problem. Big range on a big range day. The dynamic range says, be careful, risk is high. If this was that tight a range on a 30-point range day, I'd say, wow, you'd want to be really aggressive at the lows and the highs. The potential to get to the edge of the range and then depart the range, like we just saw a little bit of, is too high. And so you just can't get that aggressive, because then I wouldn't have been able to manage the risk of what I just did. Scaling it up to 5, if it dropped another 10 points, would have been catastrophic really quickly. Because liquidity doesn't let you escape a trade in ES. You can get out of a bad entry in NQ just because it moves back and forth so much. But in ES, once you're on the wrong side of the liquidity, it's over. You will never recover that trade. And I think I showed an example of that a couple of days ago where I tried to do it and was saying, don't do this, but here's an example of it. And it didn't work because it just doesn't. So let's, of course, 18 is always in play, Cal. That's the Cal number. See, it overshot a little bit this time on you, though. But again, important to understand in NQ, the 20 to 30 area is the area I play. So 18 is part of 20 to 30. So if you shorted 18 and it went to 30, that's still roughly the same spot with NQ. It's if it gets above 30 that you get in trouble, because then it's probably going to 50. But if 30 holds and you're short at 20, you're probably not off sides by much. Again, it's a matter of how it reacts on the overshoot. Like this past, when we just pushed down, it reacted really aggressively when it overshot and snapped back. If you don't see a snap back, then you're just wrong and you need to get out of the way. And that's the thing about NQ. That's why it's really hard to trade NQ without scaling in and out of entries, because it could hold the 18 to 30 area and then drop down to 0 really fast, or even lower. And you can't just short 22. There's no magic spot there. It always works its way around those numbers. And again, in NQ, those numbers are 0, 20 to 30, 50 to about 70, 80. And then if it gets above there, it's going to 0 again. So it's, and that's really, if you watch NQ, you'll see that's really repeatable. It does that all the time for whatever reason, who knows, but it's like the quarter numbers in ES, which are 0, 2.5, 5, 7.5, and 0. Those just get respected. Oh, here we go. We have a short squeeze going over here at the top of the range. We're pushing the range high. I wouldn't short this. I would have wanted to be long from the other end of the range again, but let's see what happens up here. It should find at least profit taking right on the VWAP. But if a short squeeze starts here, we could go up very hard, at least to the top of value. So watch the bid, see if they can push the bid up right there. They're trying. That's a relentless bid right now here. Let's reset. But it's not pushing the price up. See, that's the difference. The sellers are holding the price here. They're saying, yeah, we'll take as many as you want to give us here. And we're not going to raise prices because we're going to absorb you. So see, it's slightly different. But if it starts going up, it'll be different. Watch that sell side. See, the sellers here are much more aggressive. That's why it's holding. But that can change really fast. Watch the bid. Again, this entire spot's in play from 60 up to 65. So the 60 is the low end of this short-term range, and 65 is where it's got liquidity and sellers right now, you see? So this would be a tough spot to play because it's battling so hard both ways. And that's why I say over and over again, inflection points can be traded either way. This is an inflection point, and you can play this short or long. The thing is, there's usually a way that's better, and right now short's better here. That could change, but this is clearly a short at the top of the range, not a long to break out of the range, at least not yet. But on a Friday close, I'd rather be playing the low end of the range long than trying to short this. Because if a short squeeze starts here, it's going to be at the top of value 70 area really fast, like seconds. So, you would instantly be 20 points or 10 points off sides. And that would be difficult to recover from if you were short here and it's popped up there. Plus, we've got a gap above us. Again, the potential for a rip to the upside here is just too big. So playing long makes much more sense. And watch for a short squeeze. If they can push through this area, then, that goes back to what happens at an inflection point with the liquidity. Do we puke out of it? And we might puke out of this to the upside, but at the moment, the sellers are controlling this spot. So remember, I talk about who's in control. right here for the moment, it's the sellers, but the buyers are being pretty relentless. And there's the short squeeze. See, and it pushed it up. So learn how to read this. See, and the liquidity is now gone from 65. Some of it traded and everybody else moved up to 67 and a half. And there it goes, like clockwork. Watch the bid, relentless bid, pulling on the ask, stacking here, blue on the flip chart, up we go. It's that simple. Okay, so we're coming up on the bottom of the hour. I don't want to like just trade for the purpose of trading here. I wanted to try to show you examples of the different setups. And we've seen the short squeeze and the range so far. We may or may not get an extreme. And see, now we're getting a tradable range in NQ. See how this is all blue at the top up here around 50? And surprise, surprise, it's around 50. That was where the sellers took control, but it hasn't really dropped much. It's back at 30, which is the next spot down. 50. Remember, I said if it gets above 30, it goes to 50. It just did that. And the bottom here, unfortunately, is not clear at all. There's buying down here, but it's in a couple of spots and it's at 0 in the 90s, and that's 50 points away. So this is just too big a range. And that's the problem on a big range day. It's really hard to play the NQ range when it's just all over the place because it'll plow right through liquidity and liquidity will keep moving around. Even, crunch 2 to 1 here. You can see the liquidity moves in packs over there. Whereas it's much clearer and more defined in ES. Okay, coffee consumed. I am now fully awake for your learning pleasure. Excuse me. Hey, Dimitri, welcome. We're wrapping up a 2-week Trading the Close class and our usual Friday TRG closing session. Good to see you. Yeah, I'm glad you're here. Dimitri's an old friend of TRG. Many of you know him, active on Twitter and knows many of the bigger folks in the trading space, like me and Lee. He's been around a long time. So yeah, it's a fun day. We have we could get an epic short squeeze again, but it looks very orderly to me down here. I really like the long idea at the other end of the short term range, but being short here just feels like it's dangerous. And there we go. There's another short squeeze. We just got one, and you can see the liquidity pushed it up into, guess what? The next level of liquidity up there at 67 and a half. And a bunch of it traded, and then we rotated back down. So yeah, I wouldn't be trading this short. I would be looking for longs down here at the other end, and maybe a little lower like you just saw me do when that pushed lower. That was an opportunity to actually scale it. Keep an eye on the internals too. We have really weak on the advanced decline. We opened weak and we pretty much stayed weak, but the tick has pretty much recovered. So again, people are kind of using pushes down as an opportunity to cover shorts, and maybe there's some bargain hunting going on in equities. Sure doesn't look like it at the heat map though. Other than Apple, it's pretty bloody. But we needed this correction. We really did. Okay, so here's a big chunk of traded volume at 60 and then also at 57 and a half. So this might be a spot we could nibble a little baby long. Again, I wouldn't be too aggressive because the potential to go a lot lower is there if the sellers decide to get active again. But you'd probably see that coming. The tick would probably get very negative, and it's doing the opposite. We have another short squeeze. And so you'd see that. That's why I watch the tick of the broader market and the NASDAQ and the S&P cash. So again, on any other day with it this tightly trading around the VWAP, I would be really aggressively short or trading, just scalping for 3-4 ticks. But the potential here for a short squeeze to rip us to the upside is massive. And the potential for some more selling to retest the lows is also huge. So it just doesn't make sense to get scaled. You saw I just did that 5 lot a minute ago, and that paid off nicely, but it just doesn't pay to get any more aggressive. So Here we go. Now's the sweep down. Maybe I can catch another little scalp down here. Let's see if see the liquidity is right where I am. I'm actually, I could move up a tick here and that might not be a bad idea. And then maybe a little bit in the middle. Let's see if this first one fills. Again, I'm prepared to scale this all the way down to here. So let's see. There we go. We got a fill. Can we get a quick scalp for a few 3-4 ticks? Always. There it is. Again, that the short-term range, where's the liquidity? So we talked about this a lot during the class, but let's just review. You can scalp just watching these 4 things. What's the price? How is it interacting with nearby large liquidity? And is that liquidity coinciding with the quarter numbers? Well, I just did it at 60, a quarter number. So that was a perfect example, but now we're pushing down. So, you could probably play down here. And again, it could go a lot lower with this big of a range. So you don't just automatically do that. But for the short term, that's a good, thinking in bets idea. So again, let's see if we can catch a nibble down here. We'll front run the quarter number by a couple of ticks just so we have good odds of getting a fill. Maybe get in line right here. Here it comes. Nope. It traded a tick away from me front running it, and then it bounced by 8 ticks. So you see what I mean? This is a real repeatable setup if you just are nimble. Oh yeah. Didn't David, you and Dimitri met in Dallas, if I'm remembering right. Yeah. So okay, here we go. Can we get a fill? Can we get a fill? Push, push, push. Come on, come on. I'm right there. We go. We got our fill. Okay, can we get a quick 3-tick scalp? Probably. The liquidity's up there. That's a little magnet. We'll probably trade up to it, but maybe we'll take 2 ticks just to be conservative. There's 1 tick. There's 2 ticks. There's 3 ticks. Boom, we're filled. See, again, you can do this all day, guys. It's literally that simple. Again, doing it is just a matter of practice, but that is all you need to know. You don't need any other tools to do it. Those 4 things are all you have to watch. So we're at the bottom of the hour here. Let's, I'm going to set my hands and see how the bottom of the hour rotates. Remember, this M period, this was what Lee's going to talk about in his closing class, which we will schedule soon. But, if we're gonna break out of the session range, this is when it would happen. And again, he'll talk about those statistics, but it looks like for now that the range is going to hold. I don't see any massive change in the internals. And again, this is what we've been talking about all week. It's the sign of a weak market when internals, open strong like yesterday and sell off, or open weak and can't find buyers. That's what weak markets look like. And that's what's been going on for a couple of weeks now. Okay, so 5 minutes till the bottom of the hour and the beginning of our last period of the day. I still think we have potential for some massive short squeezing, but again, if you look at the cumulative delta, it's just not negative enough to really get me excited about short squeezes. It's at minus 15,000, and I like minus 30,000, and I like to be further away from the VWAP. We're right on the VWAP, so the market basically gapped down and found value here for the time being anyway. So, okay. Wow, Amazon's down 9%. Huh. Applied Materials 7. Yeah, tech's getting bloodied again. Micron's down 9. Tesla. Yep. Well overdue correction. Yeah. Yeah, Amazon, they're all getting punished, but I guess the big AI thing isn't working out for tech as much as they thought it would, at least not yet. I'll tell you what, Lee and I were talking about this a couple of days ago. he's trying to resolve a problem with Stripe, who's our credit card company, and the AI is useless. I mean, it's the AI just keeps reading him error messages from the FAQ, and he finally got a human after like 10 days, and it's a problem at their end. Their system is not letting us do what we should do and have done for 3 years, and saying that they don't have the identifications they need and whatnot, and they have them, and you get a live person, yeah, we see you have them, we don't understand. The AI is just taken over. It's just pathetic. But I've seen that in a lot of different companies. Yeah, Stripe is definitely evil, Cal. I agree. So here we go. We got another little short squeeze right there off of the VWAP. That was pretty epic, quick move. But again, still finding sellers at the top of the range and buyers at the bottom. So this is a very orderly close so far. We're really respecting, the auctioned value that we have arrived at here. Okay, this could be the beginning of a real short squeeze. Let's see. We're right at the top of the value area right now. If we can push up from here, that could really get some people off sides. There we go. There's a short squeeze. Let's see how far it can go. I'm not going to join this one. Let's just watch it. It's a pretty good one so far, though. Oh, yeah. Look at the bid. See, they're finding sellers. Finally, it's 70 area, 72.5 quarter number above value. So at least above the value area. It's really not above value. We'd have to get to SD1 here, which is all the way up at 5,400. So statistically, it really isn't value, but based on the volume profile, it's the top of 70% of the volume there, but that's not representing the extremes very well. So that's why I look at it both ways. When they disagree like that, I err on the side of the SDs of the VWAP and not the value area. The value area can also change quickly. If it just builds some volume up here, it could shift a lot higher or lower, et cetera, so. We're also not even at the top of value in NQ, and it's got a lot of room above there with no tail whatsoever. So if you look at the session profiles, I've got them on my other monitor here, but crunch it together, you can see what the volume looks like in NQ. It's massive volume at the low, long liquidation style in market profile. Just, and we're just churning down here on lots of volume. And I think ES looks pretty much the same. Let me go get it and show it to you. Hang on a second. Okay, here's ES. It's similar. See? So that's, what the market profile world considers to be a long distribution, which is pretty obvious. That's what's happening. You don't need market profile to tell you that. The short squeeze continues. I would be long if I was a little less tired because as I was showing you, I definitely would want to play this, but I've already had a pretty good day and I don't want to push it too much more. But that was a really good example of a short squeeze that's now over. We're trading back into the range. So whoever had to buy there is done. And that's as far as it got pushed. That's the thing about short squeezes. They end when they end. They don't end at an inflection point. They don't end where, your support and resistance says they're going to end. It's a unique phenomenon that ends when whoever's buying aggressively stops. And you just have to, really watch the stacking and pulling on the bid. And that'll tell you if it's happening still or not. It's really clear. And this is no longer a short squeeze. We're now at the other end of the range, and the range is expanding, and typical right at the bottom of the hour, the end of this period, going into the last period of the session. This is what you'd expect to see. So we may or may not get any more good stuff to trade here. Again, like I said, I'm going to be a little bit sitting on my hands, but I want an extreme trade. That's what I'm waiting for. I'd love to see a big push down, really aggressive push down that finds buyers that we can get long for a short squeeze back up. That would be the ideal thing today, but it's short squeezing without the big push down is what's happening. And so, you definitely don't want to be short. Look for places to join long or sit on your hands right now. And unless NQ defines a better range, it did find buyers, or excuse me, sellers right at the top of value, and the liquidity is up there. But that's at 75. That's just such a no man's land spot for NQ. If it got above there, it could get to zero in a second. So I just don't see a range over there I could play. But I do like the one in ES down at the other end of it, down by the VWAP, maybe, in the 66, 65 area down here. That's where we puked the liquidity and went up. But again, short squeezes will do that. That might not be representative of, underlying demand. It could have just been that demand for a moment when somebody was covering. So really important to understand that distinction. Short squeeze buying is a short-term event, and it can create a great opportunity long, particularly if you can get in it right when it starts at a good inflection point, good liquidity point, good quarter number point. But you never chase it because it ends just as abruptly as it started. And you never know who's behind it and how much they have to buy. The minute they're done, it's over. So, and it's a self-fulfilling prophecy. One buyer can drag some others in. But again, once the aggression ends, there's nothing to hold it up because that aggression is what got it to where it is. So that's a really important point about the short squeeze setup, that you get in it and you let it go as far as it goes. And so, by the way, liquidity again at 75, we're still at the top of value. We did pull back nicely here to that liquidity, and then we found buyers again right down there. Let's reset the volume and see if it can get going from here. Probably not. Again, these guys have been pretty assertive, but we'll see, I never have an opinion about that. I let the trade tell me. Again, what's the price? What's the liquidity around the price, and how is it interacting? When we get to it, does it trade in reverse or does it trade in puke? That's what you're watching. And then the stacking and the pulling is here's what's about to happen. Whoa, big sweep down there that got bought. That's interesting. That was a huge sweep. That swept from 73 to 71. So again, aggressive selling now. Here we go. We might get our extremes. Let's see if we can get down here somewhere, at least below the VWAP. The first interesting spot would be the bottom of this chunk of volume, maybe 54, 52 and a half, somewhere down there. But I'd love to see it get lower than that. The bottom of the initial balance is just above 40. TPO wise, we don't have a lot of excess down there, so it could easily extend down, but we got to get there first. So again, if you're in the closing class that is wrapping up today, if you have questions about anything we did in the last 2 weeks, please put them in the chat. I will answer them. Hopefully it was a good class for you and you learned something. It was fun to teach it. We got some really, really good action the last 2 weeks, particularly this week was great with all the economic numbers and talking heads and FOMCs and NFPs and all that. Okay, let's see. Why is the VWAP on Jigsaw lower than the SD chart? Because the one on my SD chart is Globex, and the one on my Jigsaw is RTH, regular trading hours. And on my Thinkorswim, I also use Globex. So you'll see it's the same there. That's the 24-hour VWAP. And the one on regular trading is slightly lower down. Yep. Yeah, I like to look at both of them because if we've had a lot of trading overnight, the 24-hour one is very relevant. If we've had a tight overnight range, then they're going to be pretty close, and I'll just pay attention to RTH. Ooh, look at this. We're down at the top of that range again, but I'd really like to see it further down to buy it. We're right on value here. Maybe right there would be kind of the first place to nibble right there where everyone else is trying to get in line too. So, everybody sees the same thing. This is the other thing that if you're new, it's important to learn. There's no magic that you can see with your tools that other people can't see. Trust me, if you can see something happening in the order flow, people that are familiar with order flow know it's happening. So, it's not like you can see something they can't. It's just a matter of executing against what you're seeing. And that's why practice is so important. Okay, we're back at the VWAP here. Let's see what we can do with this. Some good aggression down. But again, I really want to see it lower. Let's see if this area finds buyers right here. It's the bottom of the range, and it's the VWAP, but let's front run that by a tick. It still feels like we could go down pretty hard, so I'm not going to get too ambitious here, but if I can grab a few ticks real fast, I will. Let's try to catch a runner here. We could explode off of this to the upside. Got one out profitably, and I'm gonna try to get under it and protect it if I can. Again, this area should hold, but extremes are a lot lower down. So you have to be mindful of the catastrophic risk if the sellers really get aggressive here. But I'm still prepared to play it. Here we go. There's the oh wow, that was a short squeeze started, and the sellers just said, "Hold my beer," and boom. So I'm definitely on an inflection point, but we could go down hard from here. So I'm not going to get too ambitious. There we go. Let's get a short squeeze going, you guys. Come on, you can do it. Watch the tick. It's trying to roll over, but it's still negative. Big battle right here. I am definitely on a battle here at 60. I'm just being conservative because I don't want it to drop down to here and I can't manage it. There we go. Okay, come on. Let's get the second one off so we can protect it and maybe get a runner. But it's challenging to do that. Let's put another target in. Nope. Gonna push down some more. Pretty aggressive selling here. Be careful doing what I'm doing. Again, I'm experienced and I'm trading in a big eval, so I'm not that worried if I blow it up, but so far I don't want to do that. So I have some skin in the game, but this is pretty aggressive to the downside. Remember, I showed you where that eval is and where it is in the trailing drawdown, so I don't want to get too much more upside down than this. We need to get some of this off very quickly here so I can manage the rest of it. Otherwise, I'm too big. So we'll see here in a second. In other words, I've got too much size on. If I don't start finding buyers. There we go. There's the buyers. Come on, you guys. The sellers are much more aggressive right now. So we may get to the extremes and I might have done this way too early. So I may need to back out of this. Let's see here. I should be very careful here. This is the bottom of that big high volume node. Dang, it's a tricky spot. Sellers are too aggressive for my liking to scale more. So I want to see this tick get positive too, and it's not. So here it comes. Okay. There we go. Boy, I need to get out of this right here, though. Okay. When you're off sides and it gets back to break even, you generally should get flat or as close to it as you can. So, but again, the short squeeze potential here is so good. I'm going to try to work out of this spot and get underneath it. I still have a chance to do that, but the sellers are more aggressive than I'd like to see here. And see, the range is trying to hold the low after we pushed a new low to the range. This was way lower than the previous range. So that's the problem. Now the liquidity's back up at value and there's a battle here, but see that it got back to break even and it's going off sides again. So I've got to really be careful here. Let's see if I can scale just a bit more, but again, I could end up way off sides. Watch the tick, it's improving now. Here we go. If we're going to squeeze, it's going to be right now. There it is. Okay, now we got the setup and we can protect it. And we took profits. All right, so that was a little hairier than I would like, but we put $100 on the bank. So you could see a good example of that. And that's why execution is so important. That was a good idea, but again, the sellers pushed it lower than I wanted. And I had to really be mindful that, the bottom could drop out. And then the idea I really wanted to trade at the extremes would have come up. And that happens. You have to really understand where you're right and wrong before you do it. And I was prepared there to scale, but as you heard my thinking process, it just wasn't worth the risk to get too aggressive, even though it was really likely to hold. The really good setup, the better versions further down, and I have to be mindful of that. So that was a really good example of that. Practice, 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 and then you'll make the right decisions. You won't just, automatically understand the formula and do it right every time. All you're doing is thinking in bets, you're thinking in odds. But 99% doesn't mean it will happen. It means that 99 times out of 100, it should happen. Doesn't mean it will. And this is the thing about statistics that non-statistics people don't understand. Just because something's overwhelmingly likely, that doesn't mean it will happen. It just means you should plan on it being likely. And that's how you manage risk. And there's an art to that. There's no question about it. There's no magic formula of R to R or any of that nonsense you hear on the internet. And here's our short squeeze really playing out back to the VWAP. Surprise, surprise. Okay, the next setup at the close that we like, the next time of day is the 10-minute wiggle, which is 10 minutes before the close, that it gets very crazy, and that's coming up in 5 minutes. But look at that. We squeezed off the bottom of the range right back to the VWAP. So, could I have stayed in that trade? Yeah, I would have made more money, but the risk was not commensurate. So I took quick profit. Remember what I said, if you get off sides in a position as far as I was, and it gets back to break even, it's a really good risk management habit to get out of it at break even, or at least 99% of it, leave one maybe, but that habit will keep you from having it go back to break even and then go back against you and take out the low and you're screwed. And I see people do that a lot. So that's a very good behavioral tip. You will get off sides in your trades and you can't be emotional about it. You just have to manage it. And if that happens like that, you just have to already have decided how to deal with it. That way you won't make an emotional decision. And it will happen, I promise you. So that's a good technique to save yourself grief. If you get real far off sides and it happens to go back to break even, at least get most of it off and count your blessings that you got out break even because you were really far off sides, and get better at your entries, and then you won't get that far off sides. So what did I do wrong on that trade I just did? I entered too early. It was clear the setup was there, but I got a little too aggressive, a little too early. If I had put on the last couple a little later, it would have been a beautiful spot. But it got lower down than I thought based on the way I scaled it initially. So I stopped scaling and went into risk management mode because of that. Instead of saying, oh, I like it more here, I'm just going to keep averaging down. No. You don't do that. Okay, 10-minute wiggle in 4 minutes. 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 4 Short squeeze continuing above the VWAP. Now we're heading back to value high. That's why I liked that place to buy. Too bad I didn't get this big a move out of it. Oh well, that happens. Never say, oh, I should have kept this. I should have done that. I could have done that. Take shoulda, coulda, and woulda out of your vocabulary if you're a trader. Useless thinking that way. Execute on your trade. The trade's over. Forget about it and move on to the next trade. Debrief yourself, improve, but history's history. What's behind me doesn't concern me. It's what's in front of you that matters. What's the market doing right now? Okay, 10-minute wiggle coming up. We're going to wrap up right at the top of the hour. So again, if you have any questions, if you were in the class, if you weren't in the class, any questions or comments, get them in the chat if you want me to address them before we wrap up, because we will have 10 minutes and the 10-minute wiggle usually gets really busy and I may take a trade on it here. If we can get a really good short squeeze started on a push down, I may buy it again, but I'm going to be a little more conservative on where I choose to do that this time. I'd like to see it get down here. So, 55. It's unlikely to do that right now. Short squeeze again. Relentless bid. It traded though. The sellers are saying, yeah, we'll take that action. Very, very good inflection point game today. If you're watching the inflection points, they're just so clear. Like that one I was just long in, that was so obviously a battle. And it wasn't clear who was winning for a few seconds there. Oh, we're ripping up now. Here we go. Let's see if we can get our bona fide squeeze going here and get above the value. No, it's I find, David, good question, by the way. Traders that have a good sense of the market tend to be early to trades. This is something I've seen over the years. I know a lot of other traders like me that have good reads and they tend to be early. And so I learned to deal with that by what you hear me do all the time. I nibble into trades. I don't necessarily get aggressive right away. And it's all about risk management. So the answer to your question is experience. You practice it. There's no right or wrong answer of I should have waited, I shouldn't have waited. This low is really unlikely to trade. So, yeah, I could wait for the perfect setup and never get it. That's always in your head when you're doing this. But that's, again, one of the things that newer traders just don't understand. There's no certainty in this. You're playing a game of odds. And, just like anything else with odds, you can go to Vegas and sit at a blackjack table and get blackjack 100 times in a row. That happens. It's unlikely, but it happens. And every time you get it, it's just 50-50. You're going to get it again. It's just, it's not even 50-50. But my point is, you just have to think that way. Oh, we have a good push down. Okay, this could be a buying opportunity here. Let's watch the volume. Tick's very negative again. We can find a place where the buyers step up here. This could get interesting. Maybe right here. This is what I talk about with a nibble. I nibbled 57.5. I might be able to get a quick 2 points. Meanwhile, I'm going to watch the trade here and see if it's worth scaling it at all or if I should get out of the way. And I'm prepared to take profits very quickly. I'm watching the tick to see if it's going to reverse on the equity side. I'll scale a little bit when it gets that far away from me just so I can get my second contract on and off. But again, there we go. Now I've got a perfect entry and I can play it. See? That's how you do it. It was just the execution. I couldn't teach you the steps of that. I could literally tell you, David, to do this, do this, do this. while I'm doing it, and you might not execute the way that I did. That's why, you can tell a trader exactly the right thing to do, but unless they practice doing the right thing, they will never be good at it. You have to practice doing it. Nobody can do it for you. Exactly, Dimitri. That's a really good way of putting it. You guys should all read what he just wrote there. That is exactly right. It's driving is a great example. You're not thinking about each thing you do separately, the brake, the gas. You're synthesizing everything into your behavior. That's exactly right, Dimitri. Perfect way to put it. And again, you can't do that. When you learn to drive, you didn't drive the first time you got in the car. It took practice. And as you get more and more practice, you get better at driving. And, for people like me that raced, my responses to, getting out of shape in the car are automatic. When you're driving and you start sliding, human being will steer the wrong way. They will try to correct by steering against it. And the correct way to correct the slide is to steer into it. Race drivers know that, but amateur drivers crash all the time when they drive on ice and snow because they don't understand that. And so, how do you learn that? You practice it. You crash enough times on the test track that you say, okay, that didn't work. It's literally that simple. You have to practice, David, and you have to work on two things. You have to work on not overthinking, and you have to work on your emotional discipline. You make emotional decisions instead of making decisions based on your process and risk. And everybody does that. You can't someone can't just say be disciplined and you're disciplined. You have to do things that teach you discipline, like the Tai Chi you're doing. Perfect example. That teaches you to be disciplined. You can't do it and not be disciplined. So it forces your brain to learn how to do that. And you have to do it. Not Tai Chi, but you have to learn ways to, and everybody's different. All right. Well, we got a good 10-minute wiggle there. We're all the way back at the top of the range here, which, by the way, we really haven't gone anywhere since this session started. I mean, look at if I zoom in on this here, you know, we've just been going back and forth. This is what I mean when I say it's ebb and flow at the low and it's tradable. This isn't a downtrend. This is a really good place to scalp long, as a matter of fact, as we've been seeing. Put that back. All right, again, we will wrap up in about 5-6 minutes at the top of the hour when the equities close. Really good examples today of some good spots to play. And also, I think I've shown you the importance of keeping track of what the equities are doing if you're scalping the futures, because particularly at the close, futures are a derivative of the equities. They can trade differently. Derivatives don't mean they're automatically connected, but because we are derived from their cash index, it's very hard for it to get very different. If it gets very different, that's an opportunity to arbitrage. It's that simple. Oh yeah, that's true. And some people never learn it, David. I know a lot of people that are my age that are very undisciplined. And their life reflects it. My sister's a good example of that. I love her dearly, but she's the most undisciplined person I know. She thinks she's disciplined because she doesn't understand discipline. She's very emotional and she constantly reacts off of anything going on in her environment. And that's why she's a great comedy writer, because she sees the world through a different lens. She wrote Mrs. Doubtfire with Robin Williams because her perspective is like that. So, trading is the same. There's an art to this. The technical stuff, learning how to read order flow, learning how to read price action will tell you what's going on, but the execution of it is an art like anything else. And you get better at things like that by practicing. Jeff the Broken Record. There's no magic, there's no secret. You work hard and you get better, and that's your only objective. Every day is not how much money can I make, it's how much can I improve my process. The money comes from the process, not the other way around. Profit comes from process. You do not get a magic system and then you're profitable. You get profitable by practicing it. Look at that short squeeze we just had, up to 75 and massive absorption, but that was epic. Again, you always want to play the long side on days like this. It's so much easier. In the close, I mean, not at the open. Obviously, the open, we have some good shorts, but okay, again, to summarize, if you're looking for an edge, trade the 15-minute break. By far, it is the best edge I've ever seen. And I've been trading for 51 years, so that means something. Number two, practice. If you're going to trade opens and closes, do the 15-minute at the open. At the close, do the 4 setups we talked about. Be very mindful of short squeezes. Here we go again. We're way above the value area high now. We're still going. Here's your short squeeze. I'm not going to trade it, but we can watch it. It'll be fun. I mean, this could go 50 points. After settlement, after the equities close, it could go even farther because all the futures traders need to cover, and there's still obviously some that are net short. But the cumulative delta is almost back to zero now. So remember, minus 30,000 on down, it's really likely to see short squeezes. But now we probably are seeing the end of it. We're pretty close to, again, cumulative delta is not a sense of totally who's short and who's long. But if it's really extreme on the negative side, 30,000, the market's probably net short, and people are going to need to cover. So that's, again, it's not more scientific than that. There's reasons why you can have a really high cumulative delta on a down day and the other way around. It could be high on a down day or low on an up day. It's not directly representative. Again, we're a derivative, and derivatives have weird math, but that's a good sign that there's short squeezes happening when you see the delta doing that, particularly off of a pretty good negative like minus 30,000. All right, I've repeated that enough. We are now going into the final 2 minutes here. We'll see how it closes. Again, right after equities, we could see another wicked short squeeze. It's not uncommon on a day like this. The biggest one I've ever seen, somebody asked me about that, was over 80 points. And that wasn't long ago. It was about 6 months ago. And it was about 40 points of it in regular trading hours, and then the equities closed and it went another 40 points. It was insane. We were doing it. It's in the library. JVC flagged it somehow, but it was a crazy day. We traded it live in the closing session, and then after, I thought I was a genius. We wrapped up with like 40 points of profit, and then it just kept going. It was hysterical. Okay, the last minute. No, look at this. We're selling back down. Be interesting. Look at all that absorption right there. So again, that's where the sellers finally said, okay, shorts that are covering, we'll be happy to sell to you here for whatever reason. Why here? Who knows? Again, different time frames. You just have to, it is what it is. We're in the last minute. Equities are still weak. Interesting. Now it's reversing a little bit. Again, people that were short there had plenty of time to cover, and if they were bargain hunting, they had plenty of time to bargain hunt. Okay, last chance, final comments, final questions, final 10 seconds, 20 seconds. You're welcome, Peter. Thank you for taking it. Yeah, you can pose questions in the stream, the course stream. I'll be happy to answer them there, and if necessary, we could do a Q&A session that's live. But boy, here we go. There's another push up there. Hey, thanks for coming, Dimitri. Great to see you. Have a great weekend as well. There's the bell, and we'll see what happens. I'm going to wrap up here. I will see you guys for the reopen on Sunday.